It's already recorded now. So let's go to whiteboard. Okay, so can you see the whiteboard, right?
Yeah.
So New York session. So it's like the strategy name is London range. New York open. Breakout. Okay. So we will draw the rules now. Okay. Same thing as we did for this one. Okay. Okay. So the first rule is that what did we do in the handle session last time? What was the first step?
Change to 15 minutes.
Yeah, I changed 15 minutes obviously.
And then look for the
Analyze. First of all, is start analyzing charts. 15 minutes prior New York Open. Okay. That's the first step here. You have to open the chart 15 minutes before London Open. 2. Switch to 15 minutes time frame and do your primary analysis. Okay. On 15 M time frame. Okay. Refinement will be done on 5 minutes time frame. You know that, right? We refine our chart, our trading structure on 5 minutes time frame, similar to London Open. And execution will be performed. Execution means entering the trades once you identify the entry points. Okay. Execution will be performed on 3 minutes time frame. Any questions so far?
no.
Okay. This is the first step, right? Now, third step would be what do we do? We will mark intraday London session high and low. Like in the London Open, we mark the overnight session high and low. Here we will mark the intraday London session high and low. So I mean during the from London Open, okay, whatever the market like, you know, like from London Open to New York Open, okay, we will mark the high and low. Okay, so we call it as intraday London session high and low. Got it?
Okay.
On 15 minutes time frame and refine it on 5 minutes time frame. Okay. Now to mark intraday high, mark, what do I mean by mark is draw SR, support resistance line. Got it? Got it, right?
Yep. Understand.
That's what I mean by mark. Okay. All right. Now the first step would be, after you're done with it, what are you gonna do? Can you tell me? Draw
Schematic, Wyckoff.
Wyckoff structure and determine the bias of what? Of New York session, right?
Yep.
Okay. Observe bias of New York session between which points?
1 hour before.
No. On three major areas. Okay. On three major areas. What are those areas? Number one. Okay. The first area would be, let me start like this. One, like this. Number one, the first area would be, can I tell you? The first area would be intraday London high. Okay. Second area would be, I think you know this, right? You understand?
Okay.
Intraday London low. And the third one would be between intraday London high and low. Okay, these are three key areas where you have to observe, where you have to observe the bias. For example, what will be the bias on intraday London high? What will be the bias on intraday London low? For example, like this can happen that the New York sessions opens between intraday London high and low. Got it? And then after opening, it reaches the intraday London low and there is the oversold, and the price reversed and goes towards intraday London high. This is possible. And then after intraday London high, the price becomes overbought, and then the price reverses, and then the price resumes the downtrend, or the price keeps on ranging between intraday high and low. Like any types of situation can occur. But what I mean to say that we have to observe the bias, the New York session bias on these three major areas, which is intraday London high, intraday London low, and between intraday London high and low. I will explain you what does it mean later on in this video. So let's define the steps first. Number 5, what do we have to do now? Draw Wyckoff semantics, right? Identify and draw. Identify and, can you hear me?
Yeah, can.
And mark Wyckoff semantics. Okay. And obviously, once we have marked 6, whatever do, move to semantics and refine it on 3-minute chart. Identify and mark the Wyckoff semantics on 5-minute chart and refine it on 3-minute chart. Okay. We have to refine it. Do you understand what do I mean by refine?
Yeah.
For example, maybe on a 5-minute chart, we have missed some points, like for drawing the channel. So we can refine it on 3-minute chart by accurately, adjusting our trend lines and everything. Got it? That's what I mean by refine. And then the 6th one is, once you have identified it, okay, entry, execute, buy or sell orders on 3 minutes time frame and place appropriate stops and targets. Got it? Stops means stop loss. Okay. Stop loss and take profit. Let's make it simple. Okay. And the 6th one is, okay, these are key rules of London range New York open session breakout. New York session. Now, the second question arises, what assets will be affected? What assets to trade during New York Open? Can you tell me?
USD, Euro
Okay.
USD.
So I will give you a hint here. The hint is any asset that has USD pair, that has USD currency. Okay. Okay. So any pair that has USD currency, right? Okay. For example, these are the major forex pairs. I think you know about major forex pairs. You know, right? Major forex pairs are Euro, US dollar, Australian dollar, US dollar, New Zealand dollar, US dollar, Canadian dollar, US dollar, GBP, US dollar. Got it? GBP and USD, JPY. Okay. And so, but okay, so major forex pairs. So if you just go and Google major forex pairs, you will see the list of the major forex pairs. Okay, so if I write down the list here, which is USD, first of all, the major one, Euro, US dollar, GBP, British pound, US dollar, and then we have CAD, Canadian dollar, US dollar. Then we have Australian dollar, US dollar. Then we have New Zealand dollar, US dollar. Then we have USD, JPY. Okay, these are, got it?
Yeah.
And metals as well. Major forex pairs and metals. Okay, the best metal to trade here in this is XAU USD, which is gold, which is a personal favorite during New York session. Gold is my favorite. So like my personal favorite during okay, my personal favorite are Euro, US dollar. Okay, then we have GBP, British pound, US dollar, XAU US dollar. Got it? Okay, one more thing, that New York, London session. Okay, this session, which is London and New York session open breakout strategy. This is the most volatile session. Okay, New York Open is most volatile. Session is most open. Open is most volatile session. So always take proper care of risk management. Okay. For example, in New York session, you can make a lot of money in just short amount of time as compared to London session. Okay. For example, like, you know, like to make a 2 hour, if it takes around 10 to 13 minutes in the London session, in New York session, you can achieve that in just 2 to 3 minutes or even 5 minutes. Got it?
Okay.
Yeah, but the problem is it's very volatile. If you can achieve if you can achieve 2 hour or 3 hour in just 3 to 5 minutes, you can also lose that amount of money within 5 minutes as well. Got it? So we always have to place our stop loss in the right direction, and to manage our risk, we have to do a proper risk management. Later on, as we go further in the training, right, I will give you a very comprehensive training on risk management. I use several tools like a position size calculator, and I have developed an MT4 calculator as well that calculates and adjust my lot size according to the volatility of the market, volume of the market. So we have to take three things in consideration when we are trading, okay? And in terms of risk management, which is very important, I must tell you. I mean, the first one is volatility. What is volatility? Can you tell me? Volatility
The
means
price fluctuate.
how many pips price bar moves. Okay, so we usually take volatility of 14 average. Okay, we average down volatility for last 14 10 to 14 bars. Okay, got it? So we take an average of it. Okay, what's the average volatility? So volatility is basically a change in price movement. It's actually fluctuation. Okay, but it also shows you how many pips price moves. Okay, got it? How many pips price bar moves? So large range bar has large volatility. Got it?
Okay.
So during
Yep.
London and New York session, during New York session open, you will see a huge increase in volatility. The reason is because the London is open. Okay, during New York open, the London is still open. Okay, and then the New York traders also come in. So it's like, there's an overlap between London and New York session. Okay, let me show you what I mean to say. Example, if we have N8 and New York session overlap with London session. We just go here and just click on images, you will see. Here, can you see here? This is the Asian session, this is European session, this is North American session. Now, European session, which is the London session, from this 11 GMT to 15 GMT, you can see they both are overlapping. Can you see?
Okay.
So because of this overlap, there's a huge, now you see overlap between London and New York session from 12 GMT to 16 GMT. Okay, there's an overlap. Due to this overlap, there's an increase. So once the New York open, the London session is already in progress. Got it?
Yeah.
Okay, so it means that the New York session is okay. Traders from the New York also enter. As you know that London as you know that London accounts for 40% of the forex market. New York session also accounts for the 40%. So when 40 and 40 combine, it becomes 80% volume. Got it? This is the most active trading market. So these 3 to 4 hours, they are very volatile. Got it? Now, if you
Yep.
see, this is a volatility. Okay, this is a European session. Okay, this is what happened. This here from here, this is European open. This is New York open. From here to here, you can see this is very volatile. Okay, and then here the London close, and then the volatility decrease after London close. Got it? Can you see?
Yep. Yeah.
Makes sense, right?
Yep.
Okay, so here you can see another chart here. Our ranges here. Okay, so let's start now. So you understand everything from here?
Yeah.
So now we will just start analyzing the chart now. Okay, so what did I say you? So what kind of assets will I be analyzing? British pound, US dollar. So I will mark it, I will flag it, okay? Flag, let me flag it with unflagged, okay? So I have this one, GBP USD, Euro USD, and this one. These are my personal favorite, which I will trade during New York. Got it? These three, upper three. So let's analyze first of all GBP USD. Now the London Open during at around 5. There are actually two sessions when the New York Open. Got it? Okay, the first one is known as I tell you here. Okay, so the first one is known as pre New York Open. Okay, pre New York Open, which is at 5 p.m. my time, so 8 p.m. your time, 8 p.m. Malaysian time. Got it? And then we have post COVID, post New York Open session. Got it?
Yeah.
Which is at around 9 p.m. So you will see that at both 9 p.m. and 8 p.m. your time, the setup and strategy will occur. The setup will occur. So you will also trade on this time as well. And these are the two times when you will execute your trades, buy or sell order. Got it? Now, these timings you have to keep in mind. So 8 p.m., right? So 8 p.m. your time. So let me convert it to GMT plus 8, which is Malaysian time, Singapore, right? Your
Yep.
before Singapore time. Okay, so what did I say? What time? 8 p.m. 8 p.m. is this
Yep.
one here. 8 p.m.
Yeah.
Let me shift to the 15-minute chart time frame. Okay, and in the 15-minute time frame, I will go for the 8 p.m. now. This is the last session here. 8 p.m. 8 p.m. would be this one. 7 p.m. 8 p.m. Right. So let me draw this line there, vertical line, to identify my session 8 p.m. 8 p.m. Okay, and the second one was which one? 9 p.m. Okay, right. Now 15-minute time frame. This is 15-minute time frame. I told you when was the London Open. Can you tell me when was the London Open? Your time. I told you 3 p.m. Am I right?
3 p.m.
Right
Yep.
from here this time. Now can you tell me the intra high from between this point to this point? Can you tell me high and low? Which is the highest point between these two? This and this. This is intraday. Here we are calculating intraday high and low. This is the lowest point, right?
Yep.
So I will draw this. Okay. And how about this one here? The highest point between this one was this one. Am I right?
Yes.
So obviously, at first we will draw this, and then as we move on, we will keep on adjusting it until the maybe at that time our high is this one, but later on as the price moved up, we have to adjust it. Got it? So once the market opens, we will determine the final point. Got it?
Okay.
So this is what we do. Okay, you have to define it constantly. For example, but maybe so rather than define. So once you are here at 9:45, as I told you, 15 minutes before, when you are here, you have already defined. You already know the intraday high and low. Got it? That's the reason when I told you why I asked you to start analyzing the charts 15 minutes prior New York Open. What's the reason? Because at this time we will know the intraday high and low. Got it? We will know our intraday London high. We will also know our intraday London low. Got it?
Yep.
Yeah. Okay. All right. So let's go here. Okay. So once we are here, so we can mark it as what? What can we mark it? Intraday London high. Okay, bottom, top. Okay. And this one? Intraday London low. Left. Okay. Got it? Now what you're gonna do? You're gonna draw the Wyckoff structure. Can you tell me any structure which you can see between this and this? Hello, are you there?
Yeah, I'm here.
Yeah. Can you make sense of the chart? If you just see the structure. Now you come on see. Okay, this is the first structure between this and this is a range, right? We know that. Okay, so we don't need to mess up with it. Okay, we already know about it. But if you closely examine this one, okay, this one is a this one is a distribution, first higher low, and I told you from the first higher low you can draw the channel. Am I right? This is first
Yeah.
higher low, right? After this because this is a distribution. This is the first higher low, so we can draw this channel from here. No, not from here, from here. Right? We can draw this channel like this, and we can draw. Can we do like this or not? The channel, right? Am I right or no?
Yes.
Okay, so this is so okay. Let's see. This is intraday high, intraday low, right? And then you see that once you are here and this channel, right? Once you are here. What you can see that this is a distribution. Now let me hide this part data. You don't know about this data. But from here, you got an idea already that we are already in range. Are we in range or not? Distribution. We don't know whether it's a distribution or accumulation right now, but we are in a range. Can we say like this?
Yeah.
Now, as I told you that as we are going up, right here, we have a high, okay, first high, and then we observe a higher high after a very long time, right? This is a downtrend. After downtrend, you observe high. And then after high, what we observe? The first higher low. I told you, once you observe the first higher low, we can draw the channel from it, right? So we can draw these two lines, connect it. Am I right or wrong?
Yeah.
Okay. And then I can just clone it. And the last one would be connecting these two ones. Okay. But this time we can also define it as we go further down. We can just join these two one as well, further define it, and now we have a more precise entry. Because this is a buying climax. Got it? This is a kind of, like, can say, intraday high and low. So we will start our analysis from here. Got it?
Okay.
So we draw the channel. What do we observe here?
Current climate.
Oversold.
Over.
Right? Now we shift to the 5-minute chart and define it. Now things will make much more sense now. Can you see now how on 5-minute chart things are making sense? On 15-minute chart, that the channel was not clear, but on 5-minute chart, the channel is very clear. Can you see? Right?
Yeah.
Okay. Now exactly what happened during this one? What do we notice here?
Oversold.
Oversold. And what do we notice here? A very high volume. Can you see on a intraday high, low, a very high volume here? You see,
Yeah.
highest volume here. So we can draw another line from here, and we can say that this exactly was actually selling climax, right? If you mark the semantics, and this was what?
AR.
AR. Okay. Of course, this was what?
ST.
Secondary test. Okay. And then we have a ranging multiple secondary test we have. Okay. From the secondary test, okay, we observe a higher low, right? Okay, here. And then after secondary test, what we got here? Overbought. Oh, sorry, oversold. Plus, we have another characteristic, spring. Am I right?
Spring. Yeah. Spring.
Oversold plus spring, according to the situation. So do you understand these semantics? You don't have to learn it. You just have to understand what each of these, like how these things make sense. Right? Got it? Okay. So this is OS in spring. Now, if I go to the 3-minute chart, we have already the structure here. Okay, we got a structure here. And now this one is what? This is jump across the creek, right? So we don't have to, we don't know about this information. This information we don't know, right? Because this we are still trading. Right now we only know this information. So we are going up, go to the 3-minute time frame, and I told you that we have to execute our trades. Now, what do we see here? The price came down, a huge volume, rejected this both and reversed. Am I right?
Yeah.
Now, can you see here? What do we see here? This one. If you observe this part here. Here we did not get a chance because it's too high. If you place a trade here, our stop loss will be too low. Am I right? Because if we place a trade, let's suppose right over here, our stop loss will be very, very huge. And if we just go to the high, 1.88, am I right? So I will not take this trade. So what I'm gonna do on the next one, what did I observe here? Can you tell me? On the test of this? No supply, right?
Okay.
Small spread and the volume is lower than the previous two bars volume. So no supply. No supply, I could execute my position here. And then I will go, okay, my stop loss would be this last one. Okay, and my target would be obviously ultimately because this is breakout and this is my London intraday London high. So I will just target intraday London. Got it? So how much did I make? 3.03 hours. Got it?
Okay.
Now the bias, as we were between, as I told you, during London Open, what happened during London Open? What our bias was near this intraday London low, so our bias was long. Got it? And we observed the OS and spring. Got it? Now, as we breach and as we go up, now try to observe this. As you go up here, what did you see? Can you draw another channel from here to here? As you're going up, this is jump across the creek, right? Now, after the spring, what is this? This is JAC, right? Jump across the creek. We have increasing volume. You can see the volume is increasing. Okay, price bar is spreading. They are also increasing. Jump across the creek. And as we draw jump across the creek, we can also draw the channel as we are going up, right? From here to here. Because after this is a low, this is a new higher low. Am I right? Once you observe the new higher low, we can draw the channel. Channel. Now we connect this point and this point and let it go. After jump across the creek, we can just draw it, clone it. Now, what do you notice here? The highest point. We were oversold here. Am I right? After oversold, we also broke above the intraday London high. And then after intraday London high, we immediately reversed. Am I right? Can you see?
Yeah.
Oversold. Okay. And this is what? This is the upthrust. Am I see? Oversold plus upthrust. Can I say like this? Of this intraday London high, it was upthrust of this intraday London high, right?
Yeah. Oversold or overbought?
Yeah. This one, sorry, this one is overbought plus upthrust. Overbought of this channel and upthrust of this intraday London high. Can you see?
Yeah.
Right? So upthrust of intraday London high and overbought of this channel. So this has a characteristic we can say OB plus UT upthrust. Okay. UT of what? UT of this one. Intraday London high. Overbought of this channel. Got it? Any confusion? Okay. Yeah. Any confusion so far?
No.
Okay. All right. So now we have this one, right? What you can do now? We just came back here after upthrust. We came back and tested this. What do you notice here? What do you notice here? This one here, testing, during testing, what do you notice? If this is upthrust, then this is test of upthrust. Am I right? This is test of upthrust. TOUT. Right? And of course, this one would be what? This one would be what? Automatic reaction, right? And this one would be test of upthrust plus this one would also be secondary test. Secondary test. And this secondary test has what? Higher low. Sorry, lower high. Am I right?
Yeah.
Yeah. This has a lower high characteristic. So this is test of upthrust plus secondary test having a lower high. This one. Got it? And now afterwards, what do you see here? You see this part here? No demand. So we can enter a position right over here. Stop loss last high. Target intraday low. Okay, intraday low, this one, this last one. This is a major point here. Okay, this one, selling damage. This is the first point, this is the second point. So I will not hold my trade until this one. So if you try to exit at the first point. The first point was this one. Am I right? So how much you made? 6.18 R. You understand?
Okay.
Now let's suppose if I miss this, if I miss this one, if I did not notice that this was no demand, then we have another entry opportunity right over here. And what do we see? You can see effort versus no result. Can you see? Small spread bar, which is similar spread, and the volume is very high. This is effort versus no result, right?
Yep.
So if we can place a stop loss right over here and target the same low, the selling climax low, which was this one, because this is the first one. So try to target the first low. Don't go for, because if you target this one, this is also low, this is also right, but what will happen? You will just panic because the price will reverse back. It will not hit your stop loss, but you'll panic and then it will hit your this one, right? So because the smart money, the big traders, they all know that everyone is targeting this point because this is the last low. So everyone is watching this. Got it? So what they will do, they will try to drive the market before the price reaches this point, so that traders can close their position in loss, on the small profit, and then they will drive the market down. So what I suggest, the first selling climax low, which was this one, should be your first target. Okay, should be your first target. And as I told you, and as I told you, that if you are targeting the absolute low, do not target absolute low, just target few pips above, so that you are safe from this manipulation. Got it?
Yep.
Okay, so I will start the webinar again because I have less than 1 minute. Yeah, hold on. I'm calling you.